The unthinkable becomes reality. Picture this. It's a regular Tuesday morning in America. The sun's barely up, the city's just starting to hum, and you're standing in line at your favorite coffee shop, scrolling through your phone. Maybe you're checking the news, maybe you're just killing time. Suddenly, you notice a strange headline trending, something about a bank holiday. You shrug it off. After all, these things always seem to happen somewhere else to someone else. You finally reach the counter, order your usual, and tap your card. Declined. You try again, a little embarrassed. Declined. The barista gives you a sympathetic look, but you're already pulling out your phone, opening your banking app. It's not loading, just a spinning wheel mocking you. Then, a notification pops up, not an overdraft alert, not a fraud warning, but a message from the US Treasury itself. Due to extraordinary market conditions, all outgoing transfers over $500 are temporarily suspended. Foreign currency exchange is halted until further notice. Your heart skips a beat. You check your balance, your money's still there, at least on the screen. But you can't move it. You can't spend it. You can't even send it to your spouse or pay your rent. In a split second, you realize something chilling. Your money isn't really yours. It's trapped. And so are you. The world outside looks the same, but the rules have changed overnight. The government has just locked the exits, and you're stuck inside the burning building. This isn't some far-off dystopian fantasy. It's a scenario that's played out before in other countries, and the warning signs are flashing right here at home. Most Americans never imagined that the dollars in their bank account could be frozen, limited, or even seized. But history shows us that when the system is under pressure, the people in charge don't ask for permission, they act, and they act fast. The scariest part. It always starts with a temporary measure, a promise that it's just for your safety, just until things calm down. But deep down, you know that once the government takes control of your money, they rarely give it back. So what would you do if you woke up tomorrow and found your financial freedom vanished overnight? Would you be prepared? Or would you be caught off guard like everyone else? Because the truth is, the next financial shock isn't a question of if, it's a question of when. And the first sign will be when you realize that your money, your savings, your future are all just numbers on a screen, numbers that someone else can turn off with the push of a button. But how did we get here? And who built the cage that's closing in around us? To answer that, we need to rewind the clock and look at the blueprint for financial control. A blueprint that's been used before and is being dusted off again right now. The blueprint. How governments build financial cages. To understand how your money could be trapped, you have to see the blueprint. Because this isn't the first time a government has built a financial cage around its citizens. In fact, the Playbook is older than most of the laws on the books. It's a story that repeats itself every time a nation's finances start to crack. And the United States is no exception. Let's rewind to the early 1970s, a time when the US dollar was still tied to gold. Back then, every dollar in your pocket was supposed to be backed by real, physical gold stored in Fort Knox. It was a promise, a contract with the American people and the world. But behind the scenes, the government was quietly breaking that promise. Wars, social programs, and political ambitions led to a tidal wave of spending. The US was printing more dollars than it had gold to back them up, hoping no one would notice. But the world did notice. Countries like France started demanding their gold back, sending warships to New York Harbor to collect. The pressure built until, one weekend in August 1971, President Nixon made a decision that would change the financial world forever. In a secret meeting at Camp David, he and his advisors decided to temporarily close the gold window, severing the dollar's link to gold. Overnight, the dollar became a fiat currency backed by nothing but trust in the government. But here's the part most people miss. This wasn't just about gold. It was about control. By cutting the tie to gold, the government gave itself the power to print as much money as it wanted, whenever it wanted. The rules of the game had changed, and the American people didn't even realize it. The government called it a temporary measure, but more than 50 years later, that window is still closed. The lesson. When governments take control in a crisis, they rarely give it back. And it's not just ancient history. Look around the world today. In Lebanon, banks have locked depositors out of their own accounts for years, blaming emergency conditions. In Argentina, strict currency controls mean ordinary people can't even buy US dollars to protect their savings from runaway inflation. In Russia, after the invasion of Ukraine, the government froze foreign currency accounts and blocked international transfers overnight. Each time, the story is the same. A crisis hits, the government acts for your safety, and the people lose access to their own money. Here in the US, the groundwork has already been laid. Laws like the Bank Secrecy Act, the Patriot Act, and the Foreign Account Act, Compliance Act have quietly built a surveillance state around your finances. Every transaction is tracked, every withdrawal is monitored, and every attempt to move money abroad is scrutinized. The tools are already in place. All it takes is the right crisis, and the cage can snap shut in an instant. So when you hear politicians talk about protecting the financial system or preserving stability, remember the blueprint. It always starts with a promise to keep you safe. But in the end, it's about keeping your money exactly where they want it inside the system and under their control. The question isn't whether the cage exists. The question is how quickly the door can close and whether you'll be ready when it does. The debt trap. Why the system needs your money now. Let's pull back the curtain on why the government would ever need to lock down your money in the first place. It's not about some grand conspiracy or a secret cabal plotting in the shadows. It's about math, a kind of math that's quietly spiraling out of control right in front of our eyes. The US national debt has ballooned past $35 trillion, a number so massive it barely feels real. To put it in perspective, if you started counting to 1 trillion right now, you'd be at it for over 31,000 years. Now multiply that by 35. That's the hole we're in. But the real danger isn't just the size of the debt, it's the cost of carrying it. For decades, the US could borrow cheaply with interest rates near zero, but those days are gone. As rates have climbed to fight inflation, the interest payments on our national debt have exploded. In 2024, the US government is spending more on interest than it does on the entire defense budget, more than Medicare, more than almost anything else. Think about that. We're borrowing money just to pay the interest on the money we already owe. It's a vicious cycle, a financial treadmill that's speeding up with every passing month. Economists call this a debt spiral, and history shows there are only a few ways out, none of them pretty. The first is austerity, slashing spending and raising taxes so drastically that it grinds the economy to a halt. But no politician wants to be the one to pull that trigger. The second is outright default, telling creditors, sorry, we can't pay you back. That would shatter global trust in the dollar and send shockwaves through the world economy. The third option, and the one governments almost always choose, is called financial repression. It's a fancy term for quietly stealing from savers by keeping interest rates below the rate of inflation, letting the value of the dollar erode while the debt shrinks in real terms. But here's the catch. For financial repression to work, the government needs a captive audience. They need your money, your savings, your retirement accounts, your investment, trapped inside the system, unable to escape to safer ground. If people start moving their money out of US banks, selling dollars for gold, Bitcoin, or foreign assets, the whole scheme falls apart. Interest rates would have to skyrocket to keep investors from fleeing. The government would be forced to pay even more just to keep the lights on. That's why capital controls rules that limit how much money you can move, withdraw, or invest outside the country are suddenly back in the conversation. It's not about punishing you, it's about survival. When the math stops working, the government's only option is to make sure your money stays put, even if that means building higher and higher walls around your wealth. This isn't some far-off scenario. We've seen it play out in real time in countries like Argentina, where strict controls have turned the peso into a prison. We've seen it in Lebanon, where people line up for hours just to withdraw a fraction of their own savings. And now, with the US debt spiral accelerating, the same logic is creeping into American policy discussions. The tools are already on the table. The only thing missing is to trigger a crisis big enough to justify locking the doors. So the next time you hear about new emergency measures or temporary restrictions on your money, remember, it's not about you, it's about the system. And when the system is desperate, your financial freedom is the first thing on the chopping block. The slow squeeze, how controls tighten without you noticing. The most unsettling part of financial control isn't the sudden dramatic announcement on the news. It's the slow, almost invisible tightening of the rules, one regulation at a time, one security measure after another. Most Americans don't realize it, but the walls around their money have been rising for decades, brick by digital brick. It never happens all at once. Instead, it's a gradual process, so subtle that you barely notice until it's too late. It started with the Bank Secrecy Act back in 1970, a law that required banks to report large cash transactions to the government. At the time, it was sold as a way to catch criminals and drug dealers. Who could argue with that? But over the years, the net has widened. After 9/11, the Patriot Act gave authorities sweeping new powers to monitor financial activity in the name of fighting terrorism. Suddenly, every wire transfer, every international payment, every attempt to open a foreign bank account was flagged, tracked, and scrutinized. Fast forward to today, and the controls have only gotten tighter. The Foreign Account Tax Compliance Act, FATCA, now forces foreign banks to report on American clients, making it nearly impossible for US citizens to open accounts overseas. Even if you've never set foot outside the country, the IRS still wants a cut of your income. no matter where you live. It's a form of financial citizenship that follows you around the globe, a leash that's almost impossible to break. But the squeeze isn't just about surveillance. It's about friction, making it harder and harder to move your own money. Try withdrawing $10,000 in cash from your bank today. You'll be met with paperwork, questions, and sometimes outright suspicion. Say the wrong thing, and your account could be frozen for suspicious activity. In 2024, new proposals have surfaced to lower the reporting threshold for digital payment. Now, even transactions over $600 on apps like Venmo or PayPal are flagged for review. The official story is that these measures are meant to catch tax cheats and billionaires hiding assets. But in reality, it's the average person who gets caught in the dragnet. And it doesn't stop there. The next phase is the soft lock, subtle restrictions that make it harder to exit the system. Imagine a world where inflation is running at 10%, but your bank pays you 0 interest. You're losing money every day. But if you try to withdraw large amounts of cash, you're told there's a coin shortage or a new limit on withdrawals for your protection. Want to wire money overseas to buy a house or start a new life? Suddenly, there's a hefty financial stability levy tacked on, making it prohibitively expensive to move your wealth. All of this is happening in plain sight, justified by the need to fight crime, terrorism, or tax evasion. But the real effect is to keep your money exactly where the government wants it, inside the system, easy to monitor and impossible to escape. The slow squeeze is relentless, and by the time most people realize what's happening, the exits are already sealed. So while you go about your daily life, swiping your card and tapping your phone, remember, every new rule, every new restriction is another turn of the screw. The cage isn't built overnight. It's assembled piece by piece, until one day you wake up and realize you can't get out. The digital lockdown, CBDCs, and the end of cash. If you think the slow squeeze is unsettling, wait until you see what's coming next. The final brick in the financial cage isn't made of paper or policy, it's digital. For decades, cash has been the last line of defense for anyone who wanted privacy or control over their own money. But now, with the rise of central bank digital currencies, CBDCs, that last escape route is on the verge of disappearing. So, what exactly is a CBDC? On the surface, it sounds harmless, even convenient. Imagine a digital dollar issued directly by the Federal Reserve that you can spend with a tap of your phone. No more lost wallets, no more waiting for checks to clear. But beneath the shiny surface, a CBDC is something entirely different from the cash in your pocket, or even the money in your bank account. It's programmable, traceable, and most importantly controllable by the government at the code level. This isn't science fiction. In 2024, the Federal Reserve has already launched pilot programs for a digital dollar, following in the footsteps of China's digital yuan and the European Union's digital euro. The official story is that CBDCs will make payments faster, cheaper, and more secure. But the real power of a CBDC isn't about efficiency, it's about control. With a few lines of code, the government could decide where, when, and how you're allowed to spend your money. Want to buy more than your weekly ration of gasoline? Transaction declined. Thinking about moving your savings into Bitcoin or gold? Sorry, that's not an approved purchase. In a crisis, the rules can change overnight, and you won't have a say. The implications are staggering. With cash, you can buy what you want, when you want, with no one looking over your shoulder. With a CBDC, every transaction is logged, analyzed, and potentially restricted. The government can introduce stimulus payments that expire if you don't spend them fast enough, or freeze your account with a click of a button if you're suspected of unusual activity. During the Canadian trucker protests in 2022, we saw a preview of this. Power bank accounts were frozen without court orders, cutting people off from their own money for supporting a cause the government didn't like. Now imagine that level of control, but automated, nationwide, and permanent. And it's not just about what you can buy, it's about where you can go, who you can support, and how much freedom you really have. With a CBDC, the government could enforce capital controls instantly, blocking transfers abroad or limiting withdrawals during a financial panic. They could even tie your spending to your social behavior, rewarding or punishing you based on what you buy or who you associate with. The velvet cage would be complete. You could still buy coffee and groceries, but the exits would be sealed. For most Americans, the idea of a cashless society still feels far off, but the groundwork is being laid right now, with every new digital payment app, every push for financial inclusion, and every pilot program for a digital dollar. The end of cash isn't just about convenience. It's about building a system where your money is no longer truly yours, but a permission slip that can be revoked at any time. So, as the world races toward a digital future, ask yourself, Are you ready for a world where every dollar you earn, save, or spend is tracked, traced, and controlled? Because the digital lockdown isn't coming, it's already here, and the door is closing fast. The bail-in playbook. When your savings become the bank's lifeline. Most Americans go through life believing their money is safe in the bank. You deposit your paycheck, pay your bills, maybe stash a little away for a rainy day, and trust that those numbers on your screen are yours to keep. But what if I told you that legally the money in your checking account isn't really yours at all? The moment you deposit cash into a bank, you become what's called an unsecured creditor. In plain English, you're lending your money to the bank, and in return, they give you an IOU, a promise to pay you back on demand. But if the bank runs into trouble, that promise can be broken, and you could be left holding the bag. This isn't just a theoretical risk. After the 2008 financial crisis, the rules of the game quietly changed. The Dodd-Frank Act, passed in 2010, introduced a new concept to the American financial system, the bail-in. Unlike a bailout, where the government steps in to rescue failing banks with taxpayer money, a bail-in means the bank's own depositors, people like you, are forced to absorb the losses. If a big bank goes under, regulators now have the power to seize a portion of your deposits and convert them into shares of the failing institution. In other words, your hard-earned cash could be swapped for stock in a bankrupt bank, all in the name of stabilizing the system. If this sounds far-fetched, just look at what happened in Cyprus in 2013. One weekend, depositors woke up to find their accounts frozen. Anyone with more than 100,000 euros in the bank saw a huge chunk of their saving vanish overnight, replaced with nearly worthless shares in the bank they'd trusted. The government called it a one-time stability levy. For ordinary people, it felt like legalized theft. And while the US hasn't pulled the trigger on a full-scale bail-in yet, the legal framework is already in place. In a crisis, the government won't hesitate to use it. The logic behind bail-ins is simple. When a bank is too big to fail, someone has to pay the price. After the backlash against taxpayer-funded bailouts in 2008, politicians needed a new way to shore up the system without sparking public outrage. The answer? Shift the risk onto depositors. Most people don't read the fine print on their bank statements, and even fewer understand the legal jargon buried in financial regulation. But make no mistake, if your bank gets into trouble, your savings could be on the line. And it's not just about big banks. The interconnected nature of the US financial system means that a crisis at one institution can quickly spread to others. In a worst-case scenario, a wave of bail-ins could ripple across the country, wiping out savings and destroying trust in the banking system. The government will frame it as a necessary sacrifice, a way to protect the greater good and preserve financial stability. But for millions of Americans, it will feel like the ultimate betrayal. So, the next time you check your bank balance, remember, those numbers aren't as safe as you think. The bail-in playbook is real, and in the next financial storm, your savings could become the lifeline that keeps the system afloat. The question is, will you be prepared, or will you be caught off guard when the rules change overnight? The narrative machine. How they'll sell it to you if you think the government will simply announce, "We're locking down your money because we're broke. Think again." That's not how the game is played. In the world of finance, perception is everything, and the real power lies in controlling the story. When the time comes to tighten the screws, the government and its media partners will roll out a narrative so compelling, so patriotic, that most people will nod along without ever realizing what's really happening. It always starts with a crisis. Maybe it's a cyber attack on the banking system, a sudden market crash, or a geopolitical shock that sends the dollar tumbling. The headlines will scream about unprecedented threats and the need for emergency measures. Politicians will appear on TV, their voices grave, assuring the public that these steps are temporary and for your protection. The language will be carefully chosen. You'll hear about fighting financial terrorism, protecting national security, and ensuring the stability of the American economy. The real message: trust us, we're doing this for you. But the narrative doesn't stop at fear. It's also about guilt and responsibility. If you try to move your money out of the system, maybe you buy gold, invest in crypto, or wire funds overseas, you'll be painted as unpatriotic, even dangerous. The media will run stories about hoarders and speculators undermining the country's recovery. New buzzwords will flood the airwaves: fair share, climate compliance, wealth tax. Suddenly, protecting your own savings is framed as selfish or even criminal. If you use cash, you're hiding something. If you value privacy, you're helping the bad guys. The pressure to conform will be relentless, and your neighbors might even be encouraged to report suspicious activity. This isn't just speculation, it's a pattern we've seen before. In 1971, when Nixon closed the gold window, he blamed international speculators for the crisis, not the government's own reckless spending. In 2022, During the Canadian trucker protests, authorities froze bank accounts and labeled donors as threats to national security. In every case, the narrative was clear: extraordinary times require extraordinary measures, and anyone who resists is part of the problem. The playbook is already being dusted off for the digital age. Politicians and central bankers are talking about the dangers of unregulated crypto, risks of foreign interference, and the need for digital IDs to keep everyone safe. The message is always the same: give up a little freedom, a little privacy, for the greater good. And most people, overwhelmed by fear and confusion, will go along with it. But here's the truth: the narrative machine isn't about protecting you, it's about protecting the system. It's about making you feel like you have a choice, when in reality, the walls are closing in. The government doesn't need to use force when it can use persuasion, shame, and social pressure to get the same result. By the time you realize what's happened, your financial freedom will be just another casualty of the story you were told to believe. So the next time you hear a politician or pundit talking about temporary measures or national security, listen closely. Ask yourself who really benefits and who pays the price. Because in the end, the most powerful weapon isn't a law or a regulation, it's the story that makes you accept it. The warning signs, what to watch for next. If you've made it this far, you're probably wondering, how will I know when the next financial lockdown is about to hit? The truth is, these events rarely arrive with a blaring siren or a countdown clock. Instead, they creep in through a series of warning signs, subtle shifts in policy, strange headlines, and quiet changes in the rule that most people overlook until it's too late. But if you know what to watch for, you can spot the storm before it breaks. The first and most obvious sign is yield curve control. This is when the Federal Reserve steps in and announces it will cap interest rates on long-term government bonds, no matter what the market says. On the surface, it sounds like a technical move, but it's actually a red flag. It means the government is running out of buyers for its debt and has to print money to keep the system afloat. When you see headlines about the Fed managing the yield curve or ensuring orderly markets, pay close attention. This is the end game for financial repression, and it almost always comes before more drastic measures. Another warning sign is a sudden cyber attack or technical glitch that takes down major parts of the financial system. Maybe it's a bank outage that lasts for days, or a payment network that suddenly goes dark. These incidents are often blamed on hackers or foreign adversaries, but they also provide the perfect cover for rolling out new controls. After a big enough disruption, the government can justify emergency rules like digital ID requirements, withdrawal limits, or even a temporary freeze on transfers for your safety. If you see a wave of stories about upgrading security protocols or protecting the financial grid, start asking what's really going on behind the scenes. War is another classic trigger. In times of conflict, governments have always imposed strict controls on money blocking capital outflows, freezing foreign assets, and demanding that citizens do their part for the national interest. If geopolitical tensions suddenly escalate, don't be surprised if your financial freedom is the first casualty. Watch for new laws that restrict moving money overseas, or sudden crackdowns on unpatriotic investments. History shows that in wartime, the rules can change overnight, and the public is often too distracted or frightened to object. Then there's the demonization of self-custody. If you start seeing politicians and pundits warning about the dangers of holding your own crypto keys, or proposing laws that require you to register your gold holdings, take note. These moves are about closing the exits, making it harder for you to protect your wealth outside the system. When the government starts counting what you have in your pocket, it's usually because they're getting ready to take it. Finally, pay attention to the language. When you hear repeated calls for fairness, climate compliance, or fighting financial crime, ask yourself who benefits. These phrases are often used to justify new taxes, reporting requirements, or outright bans on certain assets. The more you hear about temporary measures and shared sacrifice, the closer we are to the next big shock. The good news, if you're watching for these signs, you're already ahead of the curve. Most people won't notice until the doors are locked and the rules have changed. But by staying alert, questioning the narrative, and preparing in advance, you can avoid being blindsided by the next financial lockdown. So keep your eyes open, watch the headlines, read between the lines, and don't ignore the warning signs. Because in a world where the rules can change overnight, the best defense is knowing what's coming before everyone else does. The escape plan, building your financial fortress. By now, you've seen how the walls are closing in around your money. But this isn't a story about doom and helplessness. It's about taking back control before the next crisis hits. The truth is, you don't have to be a billionaire or a financial genius to build a fortress around your wealth. You just need to understand the new rules of the game and act before the exits are sealed. The first step is to diversify your assets beyond the fragile middle. Most Americans keep their savings in traditional bank accounts or government bonds, trusting that these are the safest options. But as we've seen, These are exactly the assets most vulnerable to capital controls, bail-ins, and inflation. Instead, think like a survivor, position yourself at the extremes of safety and growth. This is the essence of the barbell strategy, a concept borrowed from risk expert Nassim Taleb. On one end, you want assets that are as close to zero counterparty risk as possible, things like physical gold and silver. These aren't just shiny metals, they're financial insurance. If you hold a gold coin in your hand, no bank, government, or algorithm can freeze it or make it disappear with a keystroke. On the other end of the barbell, consider assets that are hard to confiscate and easy to move like Bitcoin. Forget the hype and the headlines for a moment. The real power of Bitcoin isn't in its price swings, but in its ability to let you store and transfer value without permission from anyone. With a simple 12-word seed phrase, you can carry your wealth across borders in your head. But here's the catch. You must self-custody your crypto. Leaving it on an exchange is like leaving your car keys with a stranger and hoping for the best. Get a hardware wallet, learn how to use it, and take responsibility for your own digital security. Next, think globally. The days of keeping all your eggs in one basket, one country, one currency, one bank are over. Even if you never plan to leave the US, having a backup plan is essential. Look into opening a bank account in a stable foreign jurisdiction, or consider a second residency or passport if you have the means. These steps aren't about running away, they're about having options. If the US ever imposes strict capital controls, you'll be glad you have a lifeline outside the system. But a true financial fortress isn't just about money. It's about skills, community, and resilience. In times of crisis, the people who thrive aren't always the ones with the biggest portfolios. They're the ones who can solve real problems. Can you fix things, grow food, or build networks? Can you offer value that people need, no matter what happens to the dollar? Investing in your own skills and relationships is the ultimate hedge against uncertainty. Finally, don't underestimate the power of information. The internet gives you access to knowledge and tools that previous generations could only dream of. Use it. Stay informed about new laws, financial products, and global trends. Join communities of like-minded people who are also preparing for the future. The more you know, the harder it is for anyone to catch you off guard. Building your financial fortress isn't about fear, it's about freedom. It's about making sure that no matter what happens in Washington or on Wall Street, you have the power to protect yourself and your family. The window of opportunity is still open, but it won't stay that way forever. Start building your escape plan now, and you'll be ready for whatever comes next. The choice is yours. You've just walked through the entire blueprint. The cage is already half built. The surveillance cameras are on, the digital locks are being installed, the bail-in clauses are signed into law, and the narrative machine is warming up. Every tool the government will need to freeze your money, tax your exits, or simply erase your purchasing power is either live today or sitting in a drawer marked emergency use only. But here's what they can't take away yet. The fact that you're hearing this right now. Most Americans will sleep through the entire construction process. They'll wake up one Tuesday morning, tap their card for coffee, watch it decline, and finally understand that the money they thought was theirs was only on loan from a system that can revoke it whenever the math stops working. They'll panic, they'll argue on social media, they'll beg politicians to fix it, and by then the exits will be welded shut. You don't have to be one of them. Right now, today, you still have legal ways to move a portion of your wealth into assets that live outside their reach. You can still buy physical metals and lock them in a safe nobody knows about. You can still take self-custody of Bitcoin and memorize a seed phrase that no bail-in, no CBDC, and no capital control can ever freeze. You can still open accounts in jurisdictions that haven't bowed to the US Treasury's extraterritorial demands. You can still learn skills and build relationships that no inflation, no devaluation, and no temporary emergency measure can tax or delete. The door is still open, but it's closing faster than most people realize. Every new regulation, every pilot program, every temporary restriction chips away another inch of daylight. So here's the only question that actually matters when the next Sunday night announcement comes, when the president interrupts your show to tell you that extraordinary measures are required to protect the financial system. Do you want to be the person frantically refreshing a frozen banking app, or do you want to be the person who leans back, pours a drink, and said, I saw this coming years ago and I already moved? That choice is still yours, but only for a little while longer. Take action now while it's still easy, while it's still legal, while it's still boring, because the day it becomes urgent is the day it becomes nearly impossible. Stay sharp, stay sovereign, and whatever you do, don't wait for permission to protect what's yours. See you on the other side.